Chongqing automaker Series recently completed its stock offering in Hong Kong. The capital raised amounts to approximately $1.83 billion. In the current market, this IPO stands out as exceptionally successful. The Hong Kong market has already been quite vibrant in the last 3 quarters, with total IPO proceeds surging 652% year-on-year. Both PwC and Deloitte projects that Hong Kong's new listing will raise over 200 billion Hong Kong dollars this year. Series listing represents the city's largest automotive IPO ever. For Chongqing and Western China, what does it mean for an inland new energy vehicle company to step into the spotlight of global capital market? What underlying trends are driving this success? What is the resonance between the vibrancy of capital market and the industrial rise of Western China? Looking at China's economic landscape, the Western region has long been regarded as an underdeveloped basin. Not only it is geographically distant from China's Asia exchange markets in Shanghai, Shenzhen, and Beijing, as well as the Hong Kong Stock Exchange, but also its local industrial structure has been dominated by energy, resource, and traditional manufacturing. From 1990s to around year 2000, companies from Chongqing and Chengdu, Sichuan's capital city, started to make their entrance in the stock market. However, they were either local player in traditional sector, such as real estate developer Langfo, or their local financial institutions like Bank of Chongqing. For decades, the Western China has primarily functioned as a resource supplier within the national economy, rather than as a birthplace for high-tech innovations. However, a new wave of emerging enterprises from here is gaining prominence. Fast forward to the past 5 years, new listings are concentrated in emerging fields like electronic chips, medical devices and services, and aerospace, packed with technological sophistication. Advanced manufacturing from Chongqing and biopharmaceutical from Chengdu are adopting a longer-term strategy as well. Returning to Series, its collaboration with the Huawei on IPO brand has achieved massive success in the high-end market. In October alone, the IPO M7, M8, and M9 secured the top 3 spots in mainland premium extended range SUV sales ranking. Let's also take a look at the other 2 Chongqing carmaker going public in Hong Kong. Afari Technology, backed by Geely Group, is planning to launch L3 and L4 autonomous driving this year and next. Afari already submitted its IPO application in October, and Avatar, the new energy vehicle company jointly established by Chang'an, CATL, and Huawei, is preparing to file for its listing in Hong Kong in the 4th quarter, targeting approximately $1 billion. Chongqing possesses a well-established automobile production capacity and supply chain cluster. Automakers' substantial demand for R&D and internationalization funding align with abundant supply from Hong Kong's vibrant capital market at a very good moment. In the biopharmaceutical sector, Sichuan's Kunlun Biotech listed in July 2023. Another Chengdu-based biopharmaceutical, Bioking, secured joint sponsorship from Goldman Sachs, JP Morgan, and CITIC Securities. These 2 R&D-heavy enterprises have clinically valuable new anti-cancer drugs. So it is evident that China's West, where Chengdu and Chongqing are located, are increasingly viewed as new growth poles. A PwC survey reveals that over 70% surveyed multinational corporations have considered expansion here. For capital prioritizing long-term growth, Chengdu and Chongqing offer dual advantages. On one hand, they possess manufacturing prowess. On the other, they have spending power. Take Chongqing as an example. Since unveiling its modern manufacturing cluster system blueprint in 2023, Chongqing steadily advanced its goal of becoming the capital of intelligent connected new energy vehicles, now a core priority in the city's 15th 5-year plan. Chang'an and Series' success mark only the beginning. More high-tech industry SaaS enterprises will emerge in the future, entering the spotlight of capital market. Finally, let's discuss why one should consider going public in Hong Kong. The Hong Kong Stock Exchange is primarily driven by institutional investors, and they adopt a more prudent approach to valuation. Within this environment, investment targets are more likely to attract the favor of long-term and international capital. For the enterprises, Hong Kong serves not only as a platform for securing one-time capital raising, but also as a fulcrum. Firstly, it provides access to a broader pool of global institutional investors, enriching shareholder structure. Secondly, Hong Kong's international capital markets offer more subsequent and flexible financial instruments. And thirdly, higher standards of information and governance disclosure better position enterprises for international influence and global collaboration. From series successful IPO to Afari's ongoing listing application and Avatar's planned debut, the trajectory is becoming clear. High-tech enterprises from China's west, Chengdu and Chongqing, are leveraging Hong Kong's international financial market to transform themselves from regional players into global participants.